Well, we're back with you to watch your ag commodity trade on a Tuesday. Thanks for joining us. I'm Marlon Bowling. Well, let's dive right into this grain market and see what is moving today and what is not. Now, the corn market opened up on the overnight trade. It was about a penny higher or so here, and it's following through with that here. We're kind of in the upper end of the very narrow trading range. The entire range from the high to the low from the overnight trade until now is only a penny and a half wide. And we're just within one tick of our high of it. That is the silver lining here. Now that is 1 1/4 higher compared to our close yesterday. July corn up a penny, was a penny and a quarter, now a penny higher at 3.64 3/4 per bushel. Now on the soybean trade, we have seen some weakness creep into the soybean market this morning. And I had one analyst telling me earlier today that they are expecting more moisture down the road for Argentina. That's putting a little pressure on the trade. March soybeans down 4 1/4 at 9.62 1/2, and July down 4 at 9.83 1/4. Meanwhile, in the wheat trade, this wheat market in Chicago wheat has March a penny higher at 4.28 3/4. They sold it off a little bit earlier today, and now it's bouncing back a little. July down, or excuse me, now it's up a penny and a quarter at 4.54 1/4. Now on the Kansas City wheat market, the March contract is hanging in there at 4.35 3/4. That would be 2.5 higher now. July up 1 3/4 at 4.64 1/4. So we're basically about 3.5 cents off of our earlier low and just one tick off our high of the day now. In Minneapolis wheat, you have your March contract quoted at 6.26 1/4. That's up 3/4, and July up 3/4 at 6.34. And in the cotton trade, we have the March contract on cotton now 7 points higher at 78.21. Let's visit with Todd Bubba Horwitz of BubbaTrading.com in Chicago. Find out what his thoughts are on the trade. Good morning, Mr. Bubba. How are you?
Good morning, Marlon. How are you?
Doing fine, doing fine. So I'm watching these markets here. A little something for everybody here on a Tuesday. We're going nowhere very fast. Have the big reports coming up at the end of this week. What's going on there?
We're going to be watching professional paint drying sessions now. That's what we got. There's not much going on. I mean, yeah, there's a rumor there's a report coming out Friday, but there hasn't been, nobody's really committed to which way they want to jump. But I think if you look at the bigger picture, I think the biggest concern in the complex would still be soybeans. They can't seem to get back to that key level and get over it. In the meantime, although corn's been a little bit weaker, it's kind of held the last couple of days, and out of the bunch, the wheat looks the best. I mean, wheat has held up. Yesterday, they had it down about 5 cents. It actually got positive on the day before closing, slightly lower, and this morning it was down again, and they got it positive again. So I think the overall complex looks really good. My concern remains, as it's been for quite a while, is in the soybeans. I think there's a pretty good shot that March beans might trade, 940 or a little bit lower than that before they actually turn around and maybe start to go higher. So I think there's a lot of things going on here, and there has not been enough volume or action to think that anybody's tried to make a play on what the report's going to say on Friday yet.
Do you expect the markets to do anything but stay fairly flat ahead of that report release?
I expect them to move in one direction or the other. I think somebody will come in. Remember, the markets are still very thin here. And I expect somebody to take a shot at what they believe the report's going to go in and kind of price in what they believe the news to be. So I wouldn't be surprised to see a move of, I mean, not huge, but I wouldn't be surprised to see some move in a direction and then see how the report goes and treats them.
Okay, so in South America, we heard the report about possible rain in Argentina there, and of course that's going to be more and more of a factor as we move forward on the corn and soybean trade. Overall, how is the crop situated as it stands right now? I mean, is everything on pace about normal emergence from what you hear?
Yeah, I think everything is as it is, and of course that's why we see such stagnation in pricing. There isn't enough jubilation to make them go up, and there's not enough fear to make them go that much lower. So basically we're in this range that everything is kind of like it's supposed to be, although we need to get prices higher because, coming to new season, we're going to have to, we don't want to start planting at losses. So we better start getting some prices going in the right direction.
All right. Well, Todd, thanks for putting the information out. What I want to do is I want to pause for a break, and then I want to bring you back and get your thoughts on this violent action we've seen in the cattle market as of late. And it's making a bit of a bounce and early going on the live cattle trade today. The feeders cannot seem to participate. So we'll talk about that when we come back with Todd after this. We're showing the U.S. dollar value up about 170 points right now on the March futures there. And we're talking with Todd Bubba Horwitz of BubbaTrading.com in Chicago. And with that in mind, Todd, is that something that you're keeping a close eye on today, or does that really matter to you at this point?
Marlon, I don't think the dollar means anything at this moment. I think what you had here, this just goes back to the jobs report on Friday. It was bad, which is concerning the Fed, and they're trying to keep the dollar down and not let it float higher because that would be like an artificial interest rate hike. I don't think it hasn't had much of effect on the commodities of recent vintage anyways. So right now the dollar to me is not a concern. I think the concern is, you know, if we can get some actual flow of money and some velocity of money and start to see the economy pick up as good as it's supposed to be, I think that would change everything around.
Okay, before the break, we alluded to the fact that we had a cattle market that had some very wild swings here the last couple of days. Now, let's take a look at our current trade. We'll go to the big board in Chicago and pull up the live cattle trade. We have the February contract now down 24 at 116.98, and that's on the low of the day. We have April now 30 lower at 119. That happens to be on its low of the day. And we have the June contract 13 lower. It's trading at 111.07 per hundredweight, and that also happens to be on the low of the day as we look at it right now. And then I want to go on to the feeder cattle market here. If you look at the feeder prices right now, we have the January contract $1.05 lower. It's at 145.40 on the day, and you have your March contract down 74 cents. It's priced at 141.18, also on the low of the day. So it looks like we're trending lower as we go here, Todd. As we talk about the movement that we are seeing in the cattle market, how much does this concern you that maybe we're seeing day two of follow-through selling from the weakness that we saw last Friday?
Well, Marlon, actually, I'm very happy with these prices because I want to buy, and I want to buy here. This is 145 is my target in the feeders, and we're right here. So, you know, I want to be a buyer. I think this is exactly the numbers that we were looking for. We're looking for this pullback, and we're here. So now, you know, I want to step in and I want to be a buyer because I think we're going all the way back up to the highs. So, you know, and I'm basing this on January right now. So I would like to be a buyer. Fats, I'm looking to be a buyer right in this neighborhood as well. So in my eyes, from a trader's perspective, and I think from everybody's perspective, I think we get a much better up move from here. The biggest concern I have in the entire complex here is the backwardation that fats get into starting in June. That's the only concern I have, but I think that it's going to be a much better year than anybody thinks, and I think we're going to see higher prices, and these are great levels for me to go ahead and step in and say, okay, let's buy them here, because I think we go higher, and I wouldn't, you know, again, I think this is what I was looking for, and I think it looks to be a great buying opportunity, which is what I'm going to take it as.
And on the lean hog trade right now as it stands, let's look at the big board where we currently have February 46 lower at 72.52 per hundred. We have the April down 30 at 76.50, and that is off of its earlier high by about 60 cents. As it stands right now, the most weakness is being seen in the nearby contracts. Todd, always a treat to get to talk to you. Thank you for the information, and we'll talk to you again soon. Todd Bubba Horwitz happens to be with BubbaTrading.com in Chicago. There you go, Janet.
All right. Well, thank you again for the rundown, Marlon. Always appreciated.